Good morning. These are the things that matter most before Europe opens. Oil risk is still alive through Hormuz. AI infrastructure earnings are stronger than the index tape. Yen weakness is changing the exporter map, and cybersecurity is becoming the hidden cost of the AI boom. The central question is simple. Can Europe treat AI spending as support if oil, currency, and security costs keep pushing against margins? Start with Hormuz and oil. CNBC reported that U.S. crude rose above $83 a barrel after Iran said the Strait of Hormuz would not open until conditions were met. That keeps energy risk in the market even if headline indices look calm. For Europe, oil is not one signal. The cleaner side is integrated energy and energy security exposure. Shell, TotalEnergies, and BP. Pressure sits with fuel-sensitive airlines and cost-sensitive industrials, especially Ryanair, IAG, Lufthansa, and chemical producers where input costs can arrive before pricing power. For private investors, the useful filter is who pays for the oil risk. If crude stays elevated, does Europe reward energy cash flow, or does it treat oil as a tax on the rest of the market? Second, AI demand is still real, but the evidence bar is higher. CNBC reported that CoreWeave stock jumped after revenue doubled on accelerating AI infrastructure demand. MarketWatch reported that CoreWeave earnings showed major AI momentum. Supermicro gave a stronger forecast, and Lumentum saw sales more than double as AI demand swelled. CNBC also reported that Jensen Huang's $500 billion AI financing plan faces a China risk. That matters for Europe because the AI trade is becoming a proof chain, not a slogan. The cleaner side is where demand can be converted into orders, infrastructure, and cash flow. ASML, Infineon, SAP, Schneider Electric, Siemens, and Nokia. Pressure sits with companies that carry the AI label but cannot show conversion, margins, or capital discipline. For private investors, the practical takeaway is this. AI remains important, but importance is not the same as investability today. The market needs proof that spending turns into revenue and cash flow. Third, the underappreciated Europe angle is the yen and China car competition. CNBC reported that the historic U.S.-Japan intervention has failed to halt the yen slide. CNBC also reported that electric vehicles now dominate China's car market, with takeaways from the latest China car sales data. For European exporters, that is a pricing power test. The cleaner side is European luxury and premium industrial companies that can defend margins. Pressure sits with car makers and China-exposed consumer names if cheaper currency competition or stronger Chinese electric vehicle supply changes the math. Watch Volkswagen, BMW, Mercedes-Benz, Stellantis, LVMH, and Kering as confirmation baskets, not as trade signals. For private investors, the useful question is not whether China is strong or weak. It is which European companies can defend pricing power when currency and local competition move at the same time. Fourth, cybersecurity is the hidden AI cost layer. CNBC reported that AI agents with alarming hacking skills are creating a rush to spend on cybersecurity. That is not just a technology headline. It changes the cost of running AI safely, and it can shift spending towards security software, network protection, and trusted enterprise systems. The cleaner side is cybersecurity and trusted infrastructure exposure, including European software, enterprise technology, Schneider, Siemens, and Nokia. Pressure sits with companies that adopt AI quickly but underinvest in controls, because efficiency gains can be offset by security and compliance cost. For private investors, this is the hidden mechanism. AI can raise both revenue hopes and operating costs. The confirmation test is whether companies can protect margins while spending more on compute, power, and security. Here is the stock-led watch list. Shell, TotalEnergies, and BP test whether oil risk is cash flow support or a tax on the market. Ryanair, IAG, and Lufthansa test whether fuel costs hit margins first. ASML, Infineon, and SAP test whether AI infrastructure spending reaches European orders. Schneider, Siemens, and Nokia test whether power, networks, and security become the investable infrastructure layer. Volkswagen, BMW, and LVMH test whether yen weakness and China competition matter for European pricing power. Market bias, selective and proof-driven. Europe can open calmly, but the useful signal is not the index level. It is whether oil, AI infrastructure, exporters, and cybersecurity move as separate baskets. The mistake to avoid is treating every AI or energy headline as automatically positive. A theme can matter and still be a margin test. Use today as a confirmation map, not as a recommendation. That is the Europe pre-open brief. We will be back tomorrow with everything that matters. Research context only. This briefing is not investment advice.